Evet, iyi cumalar. Hem bu haftanın hem de bugün yorumlarını alalım. Öyle değil mi Hande'cim? Thank you so much for coming again, Brad.
Thank you.
I want to start where we left off.
Yes.
You said that you were, we left 2013 in a way that it was a little concerning for 2014. You were not very optimistic about 2014.
Correct.
Right? And so are you still concerned about the market in spite of the bounce, in spite of the rally that we had?
Correct. Yes, I still am very concerned about the markets. There's three main things that I brought today to talk about that continue to keep me concerned about the general markets. The first is that people keep saying that there's a lot of money on the sidelines to project the indexes higher and higher. That's not the case. Actually, the money market accounts relative to the stock market is at one of the lowest levels that it's seen basically since 2007. Margin debt is hitting record highs. That's not the type of mundane market. It's a very high speculative leveraged market. And then the last that we had was the
price sales ratio you were talking about?
The price to sales.
Oh, I know your charts. We share them with our producers. I always use your reports.
And then Chevron, Philip Morris. You have a lot. AT&T. You have a lot of large liquid names in the states that are already hitting 9-month lows. We've already had a 5 to 6% sell-off at the beginning of the year and then the bounce. But yet these large cap names are trading at 9, 10-month lows. They're already in their bear markets.
They are already in their bear markets.
Right.
I'm very happy to hear this from you because some contradict, right?
Right.
In the market. And let's put that aside for a second because I want to hear your comments about this whole week. It was a quiet week and also the snow, the storm. Fed says that they want to differentiate the effect of the snowstorms from the economic data. And then we heard Yellen talking. She talks about the measured steps. I want to learn your comments about how she reacted. She calmed the markets down. Market likes the certainty. She gave it to us. But is she really going to continue with what she said? Do you see her consistent with the tapering?
I think she's going to try to stay the course like what she was talking about the other day. But I think the minute that the market is down 10, 15, 20%, they're going to go back to what they had been doing, which is what Ben Bernanke had put in place, over the last few years.
Okay, so you're saying that she will do as she says, so she'll walk the talk. However, some people are very concerned about the economic data plus the earnings. You mentioned it as well. And Bloomberg economists, they're not very happy with this quarter. Going forward, what are your expectations from the next quarter?
Look, I think that the only positive generation in forward earnings has been corporate buybacks. That's the huge bright spot of what's really propelling the earnings and the operating margin that's sitting at about a 60-year high. And I think as we move forward, we're going to see companies continue to lower their expectations inside of their earnings ability.
Corporate buybacks. Did you hear also about Icahn? Icahn talk about buybacks.
Yes.
He stepped, away from buying back the shares of Apple.
Right. Sure.
And then that affected the performance of the stock. We're seeing that often too. What do you think about that?
Look, I think that with interest rates as low as they are, corporations are going to continue to try to play the earnings arbitrage game from borrowing money and then buying back shares. It short term does help their earnings, but the problem with that is that it's not helping their organic growth. We're short lots of companies like IBM and our HDGE short only ETF. And IBM's in terrible trouble. They're buying back tons of stock. Warren Buffett's a holder. He's certainly telling them to buy back a lot of stock. But the fact of the matter is they've missed 6 quarters in a row because they're not looking at their core business.
So where should we look, Britt? I mean, I remember in our last interview, you talked about the bond market as well.
Yes.
Right. Okay. Equity market is not that promising and pink. It's a little gloomy right now, according to your reviews and reports. How about the bond market? How about also the commodities is my next question.
I actually think commodities have had such a rough 2-year period that on a relative basis, they're actually looking quite attractive. I don't think that the bond market or the equity markets offer any kind of value whatsoever. I actually think that it's time to start looking at alternative strategies at this point where you can start playing a relative profit versus an absolute profit.
What are the alternatives?
A long-short strategy would be nice. Risk arbitrage, where you're playing corporate buyouts and you're playing the spread, and it's a more conservative style of investing. But we've had quite a run at this point in the general markets.
What should be our investment approach towards emerging markets nowadays?
I think emerging markets have come down enough where they're starting to valuationally look attractive, but I'm still not ready to get bullish on them yet. I still think there's some downside left.
Have you ever invested in the emerging markets, and how long ago was that?
When I ran a long-short fund, we spread the spectrum of pretty much anything, and then there's always the ADRs. We short ADRs in our HDGE short only from time to time. We don't currently have any positions now.
Great. Our conversation needs to be concluded here, but last 10 seconds, any comments that I can take from you about the market and economy or next week?
No, I would just continue to stay very cautious and continue to use these big updrafts as an opportunity to take some profits.
Always a pleasure to have you. Thank you
you.
Brad for coming. Evet, sohbetimiz burada sona erdi. Söz tekrar sizde İstanbul'da.